China cutting the LPR yesterday, right? Down 25 basis points on the 1 and also on the 5. This is just the latest in a series of rate cut moves by China. But at the end of the day, if demand isn't there, no matter how cheap you make credit, it's like pushing on a string, no?
Oh, yeah, you are quite right about that.
Yeah.
I mean, if you look at the overall demand right now, first of all, the consumers are strong in China. They are big in China, and consumer confidence is sort of at the all-time low right now. And if you are not going to be confident about the future, the next 6 months, the next 1 year, are you going to spend today? You are probably not, even though the price of money, which is interest rates, are low. It's not going to deter you from saving money because you are just simply uncertain, not confident about the future. Yeah. So I would say that if you look at the two broad parts of the world, in one part, let's say in China, or even the Asian mentality, whenever interest rates are lower, people do feel that, wow, I think the policymakers are telling us that the future is not going to be too bleak. Will you spend more money because rates are lower, deposit rates are lower, or will you save more? You will save more. Unlike in some other societies whereby, oh, the price of money is low, let's go out and spend.
Borrow. Yeah.
Exactly. Borrow more. Why put money in the bank? Let's spend more. So Asia is, I would say, quite different in a way.
Yeah.
Right? And second thing, if you look at it, the overall savings rate in China is pretty high as well. I mean, if I look at the overall savings to GDP, it's around 40 cents to $1. For every $1 of GDP, well, people just save 60 cents. I mean, sorry, they'll consume 40 cents. They save 60 cents. So yeah.
Listen, how concerned are you? 40 cents on every dollar goes into savings, right?
Right.
There's not a lot of options that people in China, consumers have, right? Even though interest rates are falling, they're probably not going to go out and buy another condo or apartment, right? But what is happening now, another part of what China is trying to do is not to save the economy, but to save the market. They're making it easier and also cheaper for companies to buy back their own shares on margin, right? And a lot of retail investors are probably looking at that and going, hey, maybe here's my chance. This is somewhere I can put my money. Is that dangerous?
Well, of course, in the long term, it will be dangerous because at some point, it has got to break. But at the start, you will see a flush of interest and confidence into that. Right? Exactly, that's exactly what we've seen. But markets tend to overshoot long-term fundamentals, and at the end of the day, you do not want such irrational exuberance to be in the entire asset markets. So in the long term, such type of a mentality, I think, is not so good for the entire market. But in the short term, there are opportunists who will take opportunities with this, right?
Are you telling your high net worth clients to take that opportunity?
Well, it depends. It depends. Right now, if you, I mean, the most common question right now is that, oh, should we go in China or we go out?
Yes.
But I always throw the question back to them, how much of China do you already have? If you already have lots of China, for instance, if upon a $100 portfolio, you have $80 in China, I would say hold on for a while. I think you better sell on strength. That's something you need to do to bring it to a long-term strategy as an allocation. But if you are someone who has been so pessimistic and negative about China over the last few years that you have zero China, perhaps now is a good time because at the end of the day, policymakers coming out to signal that they finally are coming to support the economy is better than them not doing so.
Yeah, okay, good point there. Listen.